Good morning and welcome back to Almus Market Mornings. Wealthy individuals playing golf and striking deals. It doesn't just happen in Hollywood. We saw prime example as the US struck a deal with the European Union, setting the tariff rate at 15%. And it was President Trump with President von der Leyen who announced the deal at the Farmers Golf Club in Scotland. Now that the EU deal is signed, we should be seeing more deals come through. Of course, all of us are also awaiting India's deal. But this week is not just about trade deals, it's a data and event heavy week. There's the Fed, Bank of Japan interest rate decisions, payrolls data, GDP estimates, and the earnings seasons from the US and India. Good morning, JK. Busy week ahead. What would be your key focus areas?
Good morning, Swaraj. Yes, it's probably one of the busiest weeks ever because it's packed with economic data, economic events, Fed meeting, and a few other central bank meetings as well. And also the August 1st deadline for tariffs also expires. Uh, so I think markets are not going to move much ahead of clarity on these data and events. Yes, we had this deal between US and Europe, where Europe agreed for 15% tariff on its imports and on its exports to the US rather. And of course, this is higher than the 10% that they were pushing for, although better than the 30% that was imposed on April 2nd reciprocal tariff announcement. Importantly, this deal excludes the steel, aluminum, and pharma. And of course, 750 billion of investments that is being mentioned by Europe into US. That requires a lot of clarity in Europe. Such things does not happen easily because it's requires alignment with various member nations as well. And also market feels that these deal needs to see a final signed deal before it can be taken. Yes, there is an intention to ward off any trade dispute, and that's a good news for the market. How the euro will take it, we have to wait and see. As of now, there is not much of a movement. On the tariff alone, we have had some statement from Trump saying that Canada is not looking to make any deal. Is disappointed that Canada has not come forward with what US wants. And there is also an indication in some reports that the deal with the China and US might be delayed by another 90 days. Basically, the deadline could be extended by another 90 days. Of course, India-US trade deal is still awaiting the light of the day. There is no real indication from either side when that could happen. Although approach of the August 1st deadline would be somewhat of a nervous expectation for the markets. On the economic data side, we did have some data on Friday. Durable goods orders data showed a decline in the US. Again, some commentary on the manufacturing side in the US, it declined by 9.3%, although it was lesser than 10.4% decline that was expected. Most of the decline came because of the transport orders being hit. UK retail sales rose at 0.9%. It was a jump from 2.8% drop that was seen previous month. Again, this adds to the mixed bag of economic data and keeps the monetary policy expectations uncertain. German business sentiment, showed that it's still the economy is riding on a wave of optimism, and it's a seventh consecutive increase in the leading indicator that is looked for by the investors. The expectations remain unchanged. Current assessments have been finally improving, and there is a lot of optimism that is seen from the German businesses, and they are expecting to invest almost 630 billion for fresh businesses is what is expected. So that's a huge turnaround. We will have a lot of data from Germany this week, flash inflation number, flash GDP data, and the retail sales, and also the unemployment number. So there's a lot to look forward to as far as Eurozone economy is concerned, which could be, driving how the investments flow into the euro region. Of course, we have the other numbers and the events also. In US, we have the Fed meeting on Wednesday. Japan meets immediately thereafter on Thursday. Both the central banks expected to keep the rates unchanged. Fed, of course, a lot of expectation or rather anticipation on what the language of the statement and also Powell's conference will be. In this context, we have to recall that Trump has personally met Powell in the last week, and he had expressed that Powell will be lowering his rates, but I mean, we have to see really whether Powell changes his tone and what grounds he will have for, if at all, he's changing his tone, because nothing has changed. Tariff impact is still expected, although so far the inflation numbers have not reflected the same. GDP number from US for quarter 2, first estimate expected at 2.5% versus minus 0.5% in the last quarter. And the PCE inflation number that will come on Thursday, of course, though Fed meets one day ahead, they would be privy to these numbers, and this will be something that they would take into account. The CPI and PPI number earlier this month had come below expectations, although they were rising still. On the BMOJ, no expectation again. We'll have to see whether there is any change in their language after the recent trade deal with the US, where they also accepted for 15% tariff. The political shakeup in the Japan, whether it influences the monetary policy. No change expected this month, but some are expecting a change in the next month. Japan has been postponing the hike in policy rate, although their inflation has been remaining well above the 2% target that they are having. Uh, of course, we'll have eventually the unemployment data report from US also, and a lot of build up to that in the form of JOLTS data. The ADP numbers, which had come negative last month, challenges, upcuts, and the weekly jobless claims. All these will be, leading up to the unemployment report on Friday. So far, unemployment situation in US has not shown as much a deterioration as the market had been anticipating. But now the view is slowly, coming to some sort of alignment that the tariffs, whatever it is going to have a very gradual impact, and we have to observe the data over a period of time, like maybe 6 to 9 months, to see how it impacts the price levels, how much of pass through is there for the consumers, and how it impacts the consumption eventually and the economy. I think as and when these deals are eventually concluded, we immediately nothing can maybe seen in the economy, and market will take its own time to assess the impact. I think that will become a less of a factor in the near term. In the long term, it could become a larger factor. As far as India is concerned, we have had quite a downbeat movement, rather quite a bearish movement in stocks and the currencies for the last 4 weeks. Stocks have been falling on a stream of negative, or rather a stream of weak reports from major companies, and more expected if you go by analysts expectations. And same thing is leading to FII flows as well, which are seen quite negative. On the rupee also, we have had 4 weeks of negative movement. Although the movement itself has not been significant, we have moved away from 85.70 to 86.60 that was seen as the high last week. This has been also due to intermittent inflows due to IPOs, but large outflows have been eventually taking the rate higher. Now, as far as India is concerned, a lot of focus on the trade deal, which is expected to be signed by August 1st. That's what the market is hoping for. But if it doesn't get signed, I think there'll be nervousness, because if August 1st deadline is not met, and if the deadline is not extended, we become subject to the 26% tariff that was originally proposed on April 2nd. A lot of contentious issues in the trade deal. That's why it is taking a long time. Eventually, market will look for two things. One, economically, what is the tariff level that will be fixed for India? whether it's going to be 15 or lower, or whether it's going to be closer to 20. And secondly, what access that India gives to the US on agriculture, whether they give it, very unlikely considering the political ramifications of such a thing. And of course, US being allowed to participate in bidding for government procurements, as was done for UK. This might be allowed, but this will have an impact on the local companies as far as competition is concerned. So the trade deal is not just about tariff. There are many other issues. That's why it is getting delayed. So Rupee will have uh, nervous waiting period to see how this shapes up, and also watching other global cues on the US and European data and the monetary policies that are coming ahead. Just expect the rupee not to go below 86.30, at least until we have some clarity on these big issues, and upside could be capped by 86.70. Thank you.
Thank you, JK. And I think one interesting thing you mentioned also previously was that we are seeing some sort of a template when it comes to trade deals. Japan had an investment clause, even the US, even the EU deal has a 750 billion investment clause. Of course, details are awaited, but generally we are seeing like this kind of pattern when it comes to trade deals. Uh, of course, with respect to Canada, as of now, there is no deal expected. That's what Trump is saying. But yeah, so that's where we are at with trade deals. For India also, hopefully we sign a trade deal before August 1st. And if it doesn't get signed, there will be quite a lot of nervousness. And this is amidst already stocks remaining weak as earnings report are not coming off that well. FII flows have been negative, which is keeping rupee also under pressure. So all of these themes would be key focus this week, especially here in India. But when it comes to the global markets, we have got a lot of events lined up. Fed meeting on Wednesday, BOJ meeting on Thursday. Both central banks expected to keep rates unchanged, but the statement and its language will be important. We have the PCE report on Thursday, and of course, the unemployment and payrolls data on Friday. So, lots to watch out for. Do tune in and keep yourselves updated with the latest happenings in the market. Thanks for listening.